All right. Today's SPY was up 0.45%, and we're still finding resistance below that previous daily high at 455, and we're still above the rising 5 EMA with price action above all the moving averages in a bull trend. So because we're in a bull trend, we need price action to prove something else is happening, and right now we have no proof from the price action that we're going to lower prices unless we break down from this lower high and make another lower low, which is going to require a rejection below 455 and a break below the low right around 451. If we get the rejection and we get the lower high, then we're likely coming back down towards this support zone at 448. And if we lose that support, we're going to have support right around the rising 20 daily moving average. And if we lose that support, then we likely fill the gap right just below 443. So while it is possible that we're going to lower prices, we need price action to prove it because we're in a bull trend, and you can't just assume the price action is going to break down. The definition of following price action is to let it do all the talking, which means we need the proof with the price action rejecting a lower high into another lower low. So for that reason, there's going to be very critical support on SPY right here between 451 and 452. And if we break that, we're likely going to 448 and then 443. Now in the bullish direction, we do have the bull trend, so we need no reason why we should be going higher. That's the expectation until price proves otherwise. And the break of 455 is going to bring us to our next price target higher at 460. And then above 460, we retest the previous all-time high. So critical resistance will be 455, and critical support to break down to a lower low is right around 452 to 451. And then the price action will guide us on which direction we break from there. On the NASDAQ 100 triple Qs, we were up 0.16% today, and the triple Qs tried to close the gap just above 374, but was unable to do so. And as we know, gaps typically get filled, so we are expecting that gap to get filled, likely right around the same time we test this rising 20 daily moving average. Now, I will caution you, there's nothing that says that gap has to fill now. For example, in a more bullish scenario, we could still push to 393 and then come fill those gaps later in the summer as we approach the fall, and that would still fill those gaps, but it would take a lot longer to do so if we went higher before we went any lower. So for that reason, don't get hung up on the fact that those gaps are there. Yes, they're likely going to fill, but we have no idea when. So that is going to require the breakdown below the rising 20 daily moving average, and we're close enough to closing that gap at 374, so I wouldn't dwell on that right now at this point in time. Now, if we fail to hold that support right around 374, then we'll be looking for the gap fill just below 369. And then if we lose the support right around 366, we're likely out of the bull trend, which means we're likely coming all the way back down towards 355 to 347. So critical support in the triple Qs is going to be right here between 372 and 374. And the critical resistance is going to be this previous resistance zone between 383 and 387. Again, just like SPY, if we break through all of this resistance, we are likely testing the previous all-time highs. So this is not anything that I would be ignoring. We are getting very, very close to some very critical levels. On the Dow Jones, we were up 0.55% today, and as I've said, the Dow Jones had a very bullish breakout above 346 because that on the weekly chart was an inverse head and shoulders that told us on a breakout we would likely test the previous all-time high, and now we're breaking through 353, which means we're likely going up for the gap fill right around 360. So the Dow Jones is looking very bullish, but that does not mean we just go up in a straight line. There's always the possibility we get pullbacks to higher lows before higher highs. And the most obvious higher low right now would be that gap fill just below 350. However, we did just break out above resistance at 353. So if the bulls can hold this breakout, we may not go fill that gap until a later date, which means we could keep rising towards the previous all-time high. So right now, the Dow Jones is looking very bullish above 353. And if we break down below 352, we're looking for the gap fill just below 350. And we're still bullish above the breakout at 346. On the Russell 2000 IWM ETF, we were up 0.25% today, and the Russell is still above all the moving averages with the price action, and we still have the bull trend. And we did reach our price target, which was that zone between 195 and 198, which is exactly what we were looking for on the weekly chart analysis. Now we still have the bull trend, so as long as we're above the breakout at 188, we're likely still trending higher into the 200s. But if we continue to get a rejection, we are looking for a downside gap at 190 if we continue a rejection below 195. If we break back above 195, we're looking for upside targets at 198 and then 201. On the ARKK ETF, we were down 1.08%, and as I've said before, when you get a breakout from a bear market resistance, you are usually coming back down to retest that breakout to prove it was not just a false breakout before you go any higher, and so far that is exactly what this ETF is doing. That retest is going to be right around 46. And if we get a bounce from that retest, that validates that the ARK ETF is heading back into a bull market. But if we slice right down through it, this was all just a false breakout and we are not yet out of the bear market. So that is very critical support. If you want to be bullish on the ARKK ETF, watch that level right around 46. And if we start to bounce from it, that's going to instantly tell us we're likely heading back into a bull trend. On the VIX, we were up 2.28% today, and the VIX is still down here at these lower levels. And as I continue to tell you, this is low fear, but if we see the VIX spiking out above 15, we're likely going to see more fear in this market, which could bring the VIX out between 18 to 20. We need price action to prove it, and that's going to require a spike in the VIX above 15. On Bitcoin, we're currently down 3%, and Bitcoin is getting a high volume sell-off down below the 50 EMA, and we are getting a bearish breakdown from that bull flag because we're breaking the support at 29,000, which means as these Bollinger Bands expand, we could reach the support at 28,000. Now, overall, if Bitcoin does not hold support at 28,000, it's likely coming back down towards the rising 200 daily moving average, which is just above 26,000. So be a little cautious when you're getting high volume selling and watch that critical support below, which is right there at 28,000. On Tesla stock, we were up about 3.5% today, and Tesla did come down to fill the gap at 264. And as you can see here, price action is below the 20 daily moving average, which is going to be a resistance zone between 271 and 274. Now, we do have a gap to fill to the upside at 289.52, but we also have this gap to fill to the downside at 235. So for Tesla, you need to be a little more risk off below 274, but you could instantly be more bullish if we break out above it. And if we get rejected from this resistance zone, we'll be looking for possible support right around 245 at that rising 50 EMA or the gap fill below at 235. As long as we bounce from this support zone below, we are still in a bull trend. So if you're bullish on Tesla, you need to manage your risk down here at these more critical support levels or wait until we break above that resistance at 274. On Apple stock, we were up 0.42% today, and Apple hit that price target at 197.5, and it's been rejecting ever since, all the way back down towards the rising 20 daily moving average and the gap fill right around 191. The gap has not fully filled, but as long as we're above a rising 20 daily moving average, we're still in a bull trend, which means we could still push higher towards that price target yet again. If we break the support right around 190 to 191, then we're likely coming back down towards 185 to 182. So jumping back over to the S&P 500, we're still in a bull trend, and there is nothing in the price action that says we're about to roll over and die. So if you want to get cautious, you can do that right here from this critical resistance, but there's nothing on the chart that tells us the bull trend is rolling over and getting ready to die. So we are going to wait for confirmation in the price before saying the bull trend is getting weaker. Just keep in mind the bears have been calling for corrections and crashes all year long, and they're going to continue to do that, especially the higher the market goes. But you need to let the price action do all of the talking and get all of your information from the chart. It's very important you block out the noise and follow the chart, and then manage your risk from these critical levels that I give you. If you want to come crush this market, consider joining Bang Trade Alerts or the Stocks Channel Discord. You can find out more information or learn how to join either service by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.